Crypto Kids, welcome back to another video. In this interview, we have Andy from Mindpillar Markets, who's going to share his thoughts on why Bitcoin can potentially even fall all the way towards $40,000. Would that be an accurate statement to make, Andy?
Absolutely, my man. How are you doing, Crypto Kid FA? I'm doing really good, and I'm going to explain a little bit on how we very likely will continue this bear market. And I am targeting the 60,000 low from a few
In the
weeks
short term.
ago to be taken. Yeah. So, and even going to lower prices, and it all has to do with a 4-year cycle theory, doing a little bit of Elliot Wave theory, and basically explaining, why this is very likely still for the next coming months.
Guys, Andy is a legend at Elliot Waves and Fibonacci. I think he's the most popular channel in those two trading concepts. So make sure to check out his channel using the link in the description down below. I'll give you a quick teaser to the content that Andy and his friend post over on Mindpillar Markets. Again, check him out if you enjoy the content that he has to share. You guys know my thoughts on Bitcoin already. So I wanted to, spice things up, bring my great friend Andy on the channel and let him take it away. And it's great to hear that you're doing fine also. Hopefully everything is going well on your end. We caught up right before making the recording. So Andy, I really want to see what you have to show. I'm actually very excited.
All right, then let's start off with Bitcoin. Basically, this, the weekly time frame, zooming out and just considering, obviously, I'm having a clean chart because I want to go through a little bit on the drawings and Fibonacci and the rest of it. So we know that the 4-year cycle theory hasn't been broken. A lot of people a few months ago, basically at the end of 2025, there was a lot of bullish perspectives on Bitcoin going to 180,000 and getting above 200,000. Naturally, it was Q4 of 2025, right? And looking at the 4-year cycle theory, then obviously we peaked out where we had to peak out, right? Was it going to be October or November? We didn't actually know exactly. On the lower time frames, we were talking about on my channel that this could be getting very close to the high. I actually sold 15% of my Bitcoin holdings. I didn't sell everything, but sold at $125,000, realizing that this is really a zone where we need to start exiting some of our spot positions, especially if you have been buying throughout the bear market, basically, right, of 2022, and even accumulating throughout the uptrend, right, of 2023. And I've been very much in favor of the 4-year cycle theory. I really did think that we're going to peak out in Q4 of 2025, and we actually did. In October we started moving to the downside very aggressively, and here we are still in the bear market, right? It's been over 6 months right now that we've been downtrending. So I do believe that we still have room to go here, and I'm going to go with the same theory, not only from the 4-year cycle theory for the bull market, which is around about 3 years, right, from the bear market low to the peak of the high here. This is like December of 2018. This is November of 2021. Okay, just about 3 years, and about 3 years also from November of 2022 to October, right? There's a little bit of a month shy there to complete those 3 years. Bear market in the previous one did take round about a year, right? There is a few weeks off, but it's round about 1 year. Same happened here throughout the previous one in 2022. And just as the bull market from the previous cycles, in the bear market as well, being round about 1 year, we are only about 6 months in the bear market, meaning that we easily have another 6 months, in my opinion, considering the timing of the cycle, right? And nothing has really changed, even though a lot of people in the past, even in the previous, but I've been in crypto since 2018. I think you've been around about that timing as well,
Wow, you're a
FA.
fossil, dude. Damn, 2018.
Yeah, it's been a long ride,
I was 11 years old in 2018.
all right, but I think you started in
Well, I started in 2019.
crypto. 2019-ish. Yeah. I
Yeah.
mean, I remember I met you when you were 14 years old. You were already
Yes.
this is why Crypto Kid, like one of the youngest technical analysts and investors, right? You would say, and traders in
Not
crypto,
anymore.
which is
Now I'm an uncle, dude. I'm my time is past.
exactly now you're, yeah, overage. So it's no longer Crypto Kid. It should be Crypto Man, right?
Crypto man. Yeah, if you know, you know.
Exactly. So yeah, basically, I'm sticking around with the 4-year cycle theory, and that the bear markets should last approximately about a year. However, the target zones is what's going to be interesting now that I want to explain when we focus on Elliot Wave theory, which is, I know a lot of people don't use Elliot Wave theory. There's not many technical analysts on YouTube. That there are some, but there's not many. So I just want to give that little bit of a fresh, higher time frame idea about, not only having the 4-year cycle theory that is suggesting that we do go lower for a few more months, but also Elliott wave theory gives us a little bit of that edge that really, gives us the idea that we are likely also going to lower prices. So when we do take a look at the previous bull market, not the one that we had here recently in the last few years, when we do consider Elliott wave theory, I'm just going to zoom in here. We do see how we have from the bear market low, of course, when you have an impulsive move, a rally to the upside in this case, in a bull market, you end up forming a 5-wave structure. Most commonly, your third wave is the strongest wave in the middle, okay, that brings that massive explosion, into the mid-end stages of the bull market. Now, from the low that we had in 2018, here around about $3,200, right? That's the low right there from the bear market that we had after that awesome rally in 2017. I wasn't in. This is when I started to hear about, Bitcoin and crypto. I did hear about Bitcoin in 2015, but this is like explosion euphoria, and you start seeing this throughout the headlines, right? So from that low, you got the first rally to the upside, the corrective move to the downside, forming a higher low, and then the big third wave explosion, as you can see here on the charts, forming that shallow. Okay, it is shallow compared to the explosion of the third wave, but this back in the day was pretty aggressive move down. But this being the wave 4, and then the wave 5 naturally being very, very shallow, not managing to break above those highs. This is, your 5th wave, usually either kind of double tops from the recent high, or it extends ever so slightly and then overall reverses. In this case, we ended up forming a bit of a double top right there. So the main reason why I point this out is just, this is how the market moves. Elliott wave theory, it can differ ever so slightly, but this is how it moves. You move up impulsively in a 5-wave structure. So when we do take a look at the previous low, and this was a little bit more challenging when we consider Elliott wave theory, there was a few scenarios here, but this ended up being the one where from the bear market low, okay, here back in 2022, you can see how you have that impulsive move to the upside, your corrective structure, as you can see, and then the third wave is the one, right, that is, the most aggressive one that happens after your wave 1 and 2. Now, your wave 4s, right, are usually relatively shallow, right, compared to, the big blast off. They're usually retraced to the 236 Fibonacci or up to the 50% Fibonacci from your wave 3. This is a shallow wave 4. This is also a shallow wave 4, and they're usually very complex and can be a bit rangy also. It is very, very common, extremely common, I would say, that after an impulsive move to the upside, I'm keeping this a little bit basic here because I know a lot of people are not very friendly with with Elliott wave theory, but
Dude, for me,
it's very, very
this is
common.
it's like a master class for me, bro. I'm blown away because I personally don't use Elliott wave theory. Perhaps the
Yeah.
audience members do, but
Okay.
I just feel this is brand new information. So thank you for keeping it so simple,
Ab-
actually, because it's helping me understand myself.
Absolutely. That's great, FA. I really like Elliott Wave theory because I do think it gives you that edge, because I know all of the type of indicators and tools to use. And Elliott Wave theory is really, it is challenging, but once you kind of crack the code, it really helps you on the possible predictions. So anyway, going forward with this, FA, it's very, very common in a bear market or in a retracement. I mean, this is higher time frame. In a retracement for the price to actually get below the fourth wave, which is something that has not happened yet. Hence the possible target getting down below $50,000, and obviously more aggressively to $40,000 would be also very, very possible. So as you can see in the bear market, we did cross below this fourth wave. That's when it's going to be looking interesting to either accumulate very aggressively. Obviously, I have bought some spot Bitcoin, but obviously for the long term, because I like buying, if we have some spare dollars on the sidelines, and I don't know where to put it, I'd say I'll just buy Bitcoin for the next few years, right? Even though a lot of people are trying to time the low, which is not suggested, right? DCAing in the bear market is always a great strategy. So overall, if once we do get to below $50,000, I mean, would be the moment that I will not be DCAing. I'll be like really aggressively selling stuff to buy Bitcoin in that case. So getting down below the fourth wave, as explained here, looking at Elliott Wave theory, is just a very, 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 very common after a 5-wave impulse to the upside. That, this is very, very likely the fourth wave when we do consider Elliott Wave theory. That's the biggest move happened here. And then the end, this is a ending diagonal forming a 5-wave move in an ending diagonal to finish the fifth wave over here. So the fact that we haven't dipped below the fourth wave, which is very, very common when we use Elliott Wave theory, is, suggesting me that we have lower prices to come very, very likely in the next coming months. Despite any bounce from here or any range, the probabilities are higher for the moment to continue this bear market and ultimately take out $50,000 at some point, right, throughout
Andy,
the rest of the bear market.
You say that it's possible to get a relief rally to the upside. So what I
Yeah.
think most people are curious on is, do you think it's more likely that we see that relief rally? And if so, what level would you be looking at before getting that ultimate dump into the 49K area? Or do you see us dumping straight to 49K? What do you see to be more on the probable end?
We are right now at a very, very crucial point on Bitcoin where this has the potential of being the high, the bounce that we got last week here at 76K, just slightly under, just because of the structure, right? I can see that you have that bearish pennant on your chart, right? That this does look like a very, very similar bearish pennant, right? Keeping it in simple terms from this one right over here, for example, right? You have the elevator down staircase to the upside, and where we at right now, which is considering the resistance levels, is at a very, very crucial point. This really does have the potential of being the high of this range, and just like this has been the high of this range right over here. And the problem is right now on lower time frames, when we consider Elliott Wave theory, the movement down has been extremely aggressive, just like this one was very, very aggressive. And when we consider the value area of these ranges, getting back down, right, after creating that very, very staircasey, 3-wavy corrective structure, when you have that high and you drop down pretty aggressively back inside the value area high in this case, that's a problem. Where we are right now is crucial because there's an extreme high probability that we could be forming even a lower high right now in this zone. And we're literally coming up to the value area high, back testing the value area high. So you can see that point of control was reclaimed just a few days ago.
So
We actually
similar to the bear flag we got before. Like you see the value area high getting taken out
yeah,
by those two candles, and then the
yeah,
ultimate local high happens, and then you
exactly.
go like it feels like it's just a full on deja vu.
Yeah, absolutely. So the fact that we are at resistance at the moment, and this is a fake out territory, right? So it doesn't mean that if you break the valley area high, it could signal a possible sign of strength, but you can see there was a fake out here, right? And you got down below. This even was a fake out, right? And you got, ending up breaking down below. So the fact that we are at the valley area high, this is like make it or break it moment, right? Where if it's going to break, we need to see some massive buying pressure and volume if you want to take out 76K at the moment with this kind of structure. The similarities are crazy, crazy similar. I've actually got a bars pattern here, which is from that price action. This one right over here. This is basically that price action that we had a few months ago, right? You can see it's literally got from this zone, and when we squeeze it in, because this happened a little bit faster, the similarities are like crazy,
Oh
crazy
man.
similar on that kind of movement here. So naturally, we've formed that three-wave move up just like here, and now we're back inside of the value zone. We are getting a bit of a bounce here, so I'm already in a local short position that might get stopped out. I'm overall inside of a swing short position already
Mhm.
from this zone. But I'm looking at levels today in a live stream. We're getting some levels ready, obviously, in the community as well. That if we do get to higher zones, I'm literally really looking for shorts at these specific levels, being very careful, obviously, with risk management. And I think looking for shorts is not a bad idea. Now, the problem is
Compared to longs.
there, yeah, compared to longs here, where we currently at the moment. Naturally, of course, we don't know at the end of the day what is going to happen, but we can have
Yeah, it's all
some.
a game of probability, right?
Exactly, we have our fractals. We have the similarities, Elliot wave theory. This does look very three wavy, just like this one over here. We move down impulsively back inside of the value zone, and regardless if this bounce is going to be shallow or come and test, right? Because the bounces that happen after an impulse, we could hit the 382 Fibonacci, or we can hit the 7.8 Fibonacci, right, from the drop. So now we're at that stage where 50% Fibonacci golden pocket 618 going to retrace. We're coming into resistance, and that's where the market confuses you. It might create a fake out. You might come into the 7.8 Fibonacci, but those are Fibonacci levels that I'm really, really looking at here to consider the short trades. That's if because I'm already in a short from here, but I would be devastated if that gets stopped out
So
at break even
if you were
and then move
not in a
down.
trade, if you were not in a trade and you were looking for that short, is there a specific price level to put a limit short in your opinion?
Yeah, I mean, there are some zones that I do see very important
Mhm.
when we do go to the weekly time frame. Weekly levels are very, very important. So as you can see, the previous 2 weeks, we got a close and open right there, as you can see, which that gives you a weekly level. And this zone, if we were to break out, today we did form already a double top scenario when we do take a look at the 1 hourly time frame, right? Which is we're testing yesterday's highs, and this is always not for me. It's always a good scenario, especially when you're at the valley area high of the entire range to sit, get into a short with a tight stop loss, right? Remember this has the possibility of coming down to the lows here at
Mhm.
67K and even going to much lower prices. So the risk to reward is so attractive at this point that I'm willing to get stopped out 2 or 3 times because I know that in a few weeks, I could be making much more than the stop losses, right? So if this double top fails, which has a possibility, then a weekly level here, the weekly level is going to be the most important for me because that is exactly at the 618 Fibonacci from the highs to the lows. As you can see, the
Oh,
golden
beautiful.
pocket 61865, and that's that weekly level that I just showed the previous week, open and close, right? And it's exactly at this zone, right? So if we are at resistance, as you can see, the price is really struggling here at the valley area high of the range of the last 7 weeks. So if this breaks out or attempts to break out, this would be the failure point, right? So this is your guideline kind of thing. I like to suggest to people that if you break out and you trade above the level of resistance, you could flip it into support basically, and you just go to higher levels. So the problem here with a limit short, that you can enter the short. However, if you break above the level, I would already consider closing that short because it might be bullish.
Right.
In the
And then
bullish
you search
scenario
for
that
the next short.
yeah, exactly. So the next level, there's two main levels here that if this is the one that doesn't reject, there's two failure points. If we were to break from this recent high, I would no longer be interested in being in the short unless we reject to either this pivot, which is a weekly with the golden pocket, as you can see from the movement down. And if that is broken, this is the kind of trade that if you hit it and get back below, that's where I would trigger the short position, because I have a stop loss above the fake out trade, right? The fake out price action. And if we do not roll down successfully, then if we move up from here, I'd rather be out of the position, because that's a brutal level of resistance that if broken, maybe the price is actually going to go to higher levels. So I don't want to be underwater here if the price is bullish. I would rather get stopped out if this level of resistance is broken. There is one more level, and that's the 7/8 Fibonacci. I like golden pocket. If we can add confluence to these levels, then better, right? It's not only Fibonacci. I like volume profile a lot, as you can see. There's a mini range that was formed last week here. And these mini ranges are like order blocks, right? There's a lot of volume happening in this zone. When we get the fixed volume profile into this zone, we actually have the high volume node, which is coming very, very close to the 7/8 Fibonacci from this movement down. So that naturally is going to be my next option to consider the short trade. Now, it might be bullish. Longs were interesting here. I'm still in a long position here, by the way. I'm a day trader, so I look for shorts and longs. But when we're coming into resistance, shorts look more interesting, obviously, right? We want to try and get the bounce, and you don't want to short down here when the price is basically already down, right? So these bounces is looking very, very interesting for the short. So if this double top doesn't work, then my next level is this one. If that is broken, I'm not holding the short. I will get stopped out if we do end up forming this kind of price action, move back up, reclaim that level. It's just you want to get out because you're breaking the resistance naturally. The next level would be the 7/8 Fibonacci, which is at 74.1, 74.2, which is also where we have the highest volume node here. So this is treated as the same scenario. If we come all the way up there, it's a failure point. If it fails, that's where I enter. That's where I put my stop loss.
Short.
And I short. But I have a stop loss above the failed breakout attempt, right? So
I really like
that's
your strategy. So you're pinpointing your levels. You put your tight stop loss. If your stop loss is triggered, you're not afraid to go short again at the next level, and you're just trying to catch a more midterm sort of bearish position.
Exactly.
Which is super in line with what I think too. I mean, I think that up to 77K now, because this is a slanted bear flag. So as time passes, the resistance also goes to the upside. Like until about 76, 77, right? Until that is broken to the upside, I'm still on the bearish side. And, from my view, I think we're seeing a repeat if we go to the weekly time frame, just from a more macro-based perspective. Like I think there's a lot of similarity with
absolutely
with this here, right?
Yeah, exactly. I mean, a few months ago, we moved very, very similar, as you saw with the bars pattern, right? From November to January of 2026, very, very similar. We got a lot of resistance. It does look like a bear flag. So if it looks like a bear flag, it probably is a bear flag, right?
Walks like a bear flag, and it's probably a bear flag. Well, Andy, my friend, it was a pleasure having you on the channel. Guys, make sure if you enjoyed that analysis to check out Andy, Mind Pillar Markets. I will leave a link in the description down below, and it will also be a collab post so you can easily subscribe. And if you're looking for a place to obviously be taking those trades or trades of your choice, always come to your own conclusions. Very important. Take what we have as one info and and build on top of it. If you're looking for a place to be trading Bitcoin and cryptocurrencies, check out our partnered exchanges down in the description. LoveX, BTCC, Weeks, Bybit. You can check those out to start trading Bitcoin. With BTCC, you can even trade things like commodities. So Andy, once more, thank you so much, my friend, for coming on. Very much appreciated, and I hope to see you soon.
Thank you for having me, Effie. Thank you, and I'll see you soon.
Take care, guys. See you. Bye.